All right, welcome to another episode of Forex Tech Magazine. It is your host, Lewis, and today is February 19th, 2019. So, if you haven't made any money so far this year, hopefully we can help you with that, or hopefully we can give you some tips and tidbits for that. Um, Turn your 2019 around. And if you have been making money, then congratulations on for you. And hopefully some of these tips and tidbits can help you make a little bit more. But before we get into that, let's get into this. Let's do the disclaimer. It goes a little something like this. Any and all information is given to you by Forex Tech Magazine should be considered to be for educational and entertainment purposes only. Nothing that is shared with you by Forex Tech Magazine should be considered to be investment advice. If you are in need of investment advice, then our suggestion to you would be to seek out the assistance of a licensed, competent advisor. Now that we got that out of the way, let's go ahead and get into this and start looking at some of these potential trade ideas that we have here on the board right now. First one we'll look at is the Great Britain pound, New Zealand dollar. Let's see what we got here. Let's see here. I think this one here I was looking at a pullback, so I was kind of monitoring it. Yep, because we had some downward momentum coming in play over here. This was our. Here, let's look at this. Mm-hmm. So let's see here. And what I'm doing, by the way, is using the smart tools on the Smart Trader software, which happen to really make trading a lot easier. With fibs, anyway. Too big. Oh, too much. TMI, too much information here. Let's see here. Go back. All right. You know, let's do this. I was looking at something here. I can't remember what I was looking at, but let's go back. Let's look at it on a daily. All right. Boom. So here we go on the daily chart. Here go our support, resistance, support. So we've been hanging out around support for a minute. Looks like price was on its way down. We had a bit of a pullback. And now price is back on that downward leg. Let's look at here. Mm-hmm. Mm-hmm. Now, according to this right here, and this is pretty interesting. If you look at this, look. What I'm doing here, I'm looking at where price is currently at. Well, where price pulled back to 1.4336, 1.4239. All right. That's pretty interesting. So let's look at this. What is price actually doing? Well, price was moving down, right? And then price began to move up, and then price started moving to the side. And now price moved down and then started moving to the side again. Now we know that price 70% of the time moves in the direction of the original trend after it comes out of consolidation, and right now it appears that it's consolidating, right? And it looks like the original trend was some upward momentum here. Well, was, yeah, upward here. Let's see if it had crossed over into the buy zone. If we were still looking at something that was okay, so price will cross over to the buy zone. But it ran into some pushback with the, which was support, but down has become resistance. So for this one right here, even though it is making a move up, right now, I'd stay out of it until we get some more clearly defined entry points. It just looked like, when I'm looking at this, it just looks like, excuse me, it just looks like some mess, like some mucky, muddled mess. And I've used that term before in the past, and I'll continue to use it again, because that's what it looks like. It doesn't look like there's any type of discernible entry for trade. And as you can see, here goes the top. This is a downward trend line. Price needs to cross over the downward trend line before we can get in and start to buy on this particular pair. And of course, we have this support slash resistance right here, which is going to it needs to cross over that barrier too as well before we get into a before we start looking at a buy. Because anytime you see those support and resistance lines in the market, they typically tend to be what, U-turns in the market. And what you don't want to do is trying to get in and you hit that U-turn and you get knocked right back out. So I'm gonna have to say that this right here, my friend, would be a hold at the moment, even though we're starting to see some price action in this, which is good. But right now, I would just kind of sit on that. Let's look at this one here. This is one we got into yesterday. This right here is our Great Britain pound, Canadian dollar. Let's kind of think about this one here for a second. Let's look at this. What's this thing looking like that? All right, let's see here. Wow, it didn't reload. That's crazy. Oh no, I went back to New Zealand dollar. That's one. All right, well, here we go. Perfect. Bigger. So as you can see here with this one, this right here is where we got in at. Well, on this candlestick here, this right here is the essentially the price. And you say, well, why is the candle wick not there? But you see my entry line is, right? And the reason why you see that is because there's this thing called the spread. I actually took a pretty big push with this one right here. We did 10 pips instead of like the standard. I mean, I'm sorry, 10 pips, but we did a leverage of 10 standard lots instead of just the standard one standard lot. And just because we want to just do some, just play around with it, use some extra leverage on this right here. Because we thought it was such a really strong entry point, we had support and resistance down here that's backing us up. So if the price would start to fall, we had a pretty tight level of support, tight level of support. Sorry, it's still early for me. Then we also had the downward trend line that we had already crossed. We crossed over the minor one, and then now we're crossing over on the major one. So just a lot of information here that was kind of pointing towards a strong upward movement for this particular pair. And as you see here momentarily, we should be turning profitable on this one. And once we do, we're going to look to go ahead and start locking in that those profits and turn this into a risk-free trade. Because I tell you what, this is a pretty scary trade because this thing started going down on a little bit, and we trading at 10 pips or 10, not 10 pips, but 10 standard lots. It doesn't take much to move your account in the negative way. But let's look at this right here and let's kind of analyze it a little bit further. All right, let's just look at it. This thing really came a long way when you look at the what we're looking at this Fibonacci sequence where it started taking place. It took place back over in January, right? Here goes the A, here goes the B. What we thought was the C. The price went up, almost connected with the A, and then proceeded to go down, right? To what we thought was the next C. Price goes back up again, hits this resistance, right? And then we start to notice that, hey, look at this trend line here, right? Price is bouncing lower. Right, this is going to be the outer trend line. Well, price came down on the inside, hit resistance or support again, came back up, didn't come too far up. So now there's an inner trend line going on here. All right, comes back up again, kind of retests it, push through it, and starts making its way up. So there was a lot of stuff that was going on with price with this particular pair, and it took you think about it from February 15th all the way up into, January 15th all the way up to February 19th. That's a long time to be in this trade. And it's one of the reasons why I advocate the risk-free trade method. So that way, as soon as you get a profit, you're going to start locking that thing in. So that way, you're not stuck out here, waiting for something to happen, waiting for you to hit your target point or your take profit point before, you get out of this trade. Because it's one thing to just, spike right up to it, hit that take profit, get your money, get out and go. There's another thing staying in a trade for almost a month, having to deal with these pullbacks and stuff, and then get your money and go, right? So what we want to try to do is avoid that, especially to the person that would have gotten in up and around here, right? Because now you take profit, take profit originally was up here, right? Which makes sense because you are red to red, right? But if price is still in that mode where it's supposed to go back, where it looks like it's supposed to go back. Price is still in that mode where it's still complete the Fibonacci sequence would be going back to the red. But if price will start to decline more, then all of a sudden you go back to the lavender or the blue or the green. Which if you got in up here, then that means that you're definitely taking a loss because price is only scheduled to go back here or here. All right, and so you want to avoid those types of potential mistakes. And the one way to be able to do that would be to lock in your profits early and often. So that way, if price starts to move against you, it's not really a big deal other than the sense that you're going to have to look for another entry to get back in. But the good thing is that you got out and you made money. And that's what you want to do, right? I consider that to be, and I heard other people say the same thing, it's like a base hit in baseball, right? Boom, you got on base, which is good. Sometimes you get a home run, and the home run, of course, is going to be when you're able to get in. Maybe you got in here, right? And price just pushes all the way up and hits your take profit within a matter of a couple of hours or a matter of a couple of days or whatever. And you just got in, you got out, and you made money. Like, it didn't pull back. You had so much momentum in there, and everything just pushed and work right to exactly the way you planned it. Right, everything lined up for you perfectly. Those things are great when it happens, but it don't happen always. Oftentimes you get this up, down, it goes up, push back, it gets close, it starts to push back, and then it goes down, and all this other stuff, and it can keep you in a trade for an extended period of time. And so to avoid that, like I said before, use that take profit method. Whereas once you get profitable, you lock in that profit, and then you let the trade proceed on a risk-free trade basis, and then see what happens, man. Right? So that's that one. Let's look at the Great Britain Pound, Japanese Yen. It's another one I was looking at. I was waiting for it to cross over into the buy zone. Oh, you got smaller. I see. So this is the candlestick we're at right now. It's pierced through that trend line, the downward trend line. So depends on where it closed. It could be an indicator that there's potential to go ahead and start buying into this product. Won't know until around about what 4 o'clock, 4:30, somewhere around that. And if that's the case, that means our take profit is going to be up here still. And excuse me, that is about 222 pips of profit. You can put your stop loss either here under that swing or this swing here. So catch that. So either this swing or this swing here. And this swing is pretty aggressive stop loss because it's going to put you up 47 pips. Here it's going to put you back at 200 pips. And of course, if you went all the way down to the A, it's going to put you out of the game. Yeah, it's like 562 pips. No, it's definitely not something you want to do. I would say keep looking and see if you see something a little bit better. But if not, yeah, try this right here. Maybe do 47 pips. Risking 47 pips to get 222 pips is not bad. Use a one standard lot or maybe even a mini lot on that. Test it out and see if it's actually gonna hold, and if it does hold, you can add more to a position. That's nothing that we haven't really talked about, but you don't have to go all in when you first get into a position. You can test the position out with a small balance, maybe try with a mini or micro, just to make sure that we get some traction here. And then what you can do as it starts to move, then you can build onto it. There's a lot of different ways you can trade, a lot of different strategies. What you have to do is kind of explore and figure out which one works best for you. Of course, do the math beforehand, which is basically looking at it and see if it's going to make sense. Financially wise, to be in that trade, but or to even try that strategy. But a lot of different strategies out there about how to trade your account to get into a trade more effectively. So here's on the buy side of things. Blah, blah, blah. All right, looks like the price went in. And on the buy side, this is a Great Britain Pound, Aussie dollar. It's 248 pips. Maybe 57. All right. So it's again another good possible opportunity here. All right, price is on the buy side. Get in here and buy now. It's like 247 pips. Do a standard lot. See everything push up. It's been making higher lows, right? It goes low, higher low, higher low. So it looks like it's definitely up an up move. The question is, how much momentum will it have behind it? So we're gonna put that as a maybe. This one right here. This is the U.S. Great Britain pound, U.S. dollar. Still not a buy for me. So here's the thing. So there's some buying opportunities in the market, but I'm telling you right now that the momentum in the market is fairly weak. Right, that seems to be a problem. That's not as strong. I mean, it's getting there. It's trying, but it seems like the push is kind of. All right, so here's a buy. So we're in buy mode now for here. But we still got that outer trend line that we got to push through. So there's some opportunities out here. All right, I would say right now, this one probably looks the best to me, which is the Great Britain pound Aussie dollar. All right. So if anything, I think this would be the one that I'd be looking at taking. Probably put my stop loss a little bit below here. Of course, take profit and go ahead and get on that entry. All right, see how it rides out. So that's what I'm looking at. Let's look at. So this is my other alternate trades. Aussie US dollar. What do we got here? This one here was supposed to be a pullback. Alright, so you see right here where the D extension is. Here go A, here go B. Got a couple of what we thought were C's. This right here potentially is C here. Price below the trend line. So if you can look here and kind of match, well, yeah, you don't even have to imagine here. Look here. Excuse me. Trend line price below it. Once price breaks below the trend line, then of course you can sell. All right, it's a good selling opportunity. But these are all intermediate trend lines. I think if we look here and look at the bigger picture, this is kind of the bigger trend line here, right? And I think really to get the minimum that you need to go ahead and hit this D extension would be for price to fall below this here. Because these are fine, you know. See price fall below, you can make some money. Price falls below, make some money. But the real money is going to be made once price drops below here, right? I think right now what you're seeing is just a pullback, and I think a part of this right here is just because don't really know what's going on, and certainly what's going on with the China-U.S. trade agreements, with those tariffs and everything, what's happening. There's a lot of negotiating going on, a lot of rumors, a lot of reports coming in and out about it, some good, some bad, and nobody really knows for sure, and I think that's what we're seeing right now in this currency pair, and really in all these Aussie pairs, right? Kind of cautious about that, and what was that? Kind of cautious about that as we go through. Let's see here. Hi, let's see, Cromwell. Welcome to the stream. All right, buddy. What's going on, my friend? So I got that notification. It's kind of like, what in the world? Let's see here. U.S. Canadian dollar. Let's look at this one here. Oh, come on, man. It's done so well. Here goes another one. Looks like prices crossed over into the buy zone. It's going up pretty well. And then looks like now we're starting to get a little bit of sell off here. Not really sure why. We had a nice pickup here. This was actually after this market had pretty much closed. We was out of the U.S. market already closed. This is going to pretty much tie with the Canadian dollar and also with oil. So the only assumption here is that one, we had a resurgence in buying in the U.S. dollar. Maybe something happened. I haven't really researched as far as to see why, or maybe something where the oil prices had dropped. In fact, let's go over here and check our news channel and see if we see anything in here that looks like it would be newsworthy that could help us kind of figure out what happened. So I don't see anything right off the bat that would tell me. So here's the U.S. Canadian dollar, clown lack of data. Okay, so this could just be some market noise, or it could be somebody who, because the market didn't have any data, whatever was coming out today, and I mean yesterday, and also because it was President's Day over here in the States, so like a banking holiday, that somebody was able to come in here and take a position after the close of the U.S. markets in preparation for what they anticipate was going to happen going on today. So at any rate, we'll see. We'll look at it and see what's going to happen here going forward. Okay. So that's pretty much it for us tonight. I do have. I will go back in. I will put that trade on for the for this one here. I believe. I think looks pretty solid. I'm gonna try it out. We'll see what's up for this one here. Great Britain pound Aussie dollar, and we'll see how that plays out. Is there any economic information coming out about the okay, so there are some economic information coming out today. All right, well, we'll see. But anyway, I kind of like this right here, so I think I'm gonna go with it and put a trade on and put a tight stop loss. Put a tight, not too tight, but stop loss back here, maybe a little bit below what we view as the C for this particular pair, and we'll see how this pushes out over the next 24, 48 hours. Anyway, thanks for joining me, guys. I appreciate it. Today we kind of get out here kind of early, so it's only like 30 minutes of session today. Like I said, there's not a lot going on. Looks like everything's I'm starting to get some pickup in momentum with the Great Britain pound pairs, but not something where it's like, ooh, we got to be in on all of these pairs right now. But some of them start to pick up. Some of them the setups are starting to really develop. So that's good. And remember what we want to do. We don't want to chase trades. We want to wait till the trade develops. And then once it develops and an entry presents itself to us, then we want to look at that entry versus other potential entries in the market and see which one presents the better opportunity. And whichever one presents the better opportunity, that's the one we want to trade. At any rate, listen, thanks for joining me. I had fun. Hopefully you guys got something from this. And I will see you guys in another 23, 24 hours. Take care.